We continue with our discussion. Robert Parker of Credit Suisse Asset Management Company has been speaking with us. We also have Ajay Srivastava of Dimensions Consulting. Okay, Robert, is there anything that can make you not buy emerging markets, in particular India, that you may hear from the Fed?
I think the answer to that is probably not. And I think if one looks at the various scenarios over the next few days, I think scenario number one would be the Fed does nothing at all, in which case I would be worried, and I actually think the market reaction could be quite negative if that takes place. The second market reaction is if they raise rates by 25 basis points or slightly less, that they come out with a dovish statement, in which case I would expect actually quite a positive market reaction for all global equity markets. Then the third scenario is they raise rates by 25 basis points and come out with an indication to investors that actually the pace of interest rate increases is going to be faster than expected. I would assign actually a very low probability to that third scenario, but under that scenario, obviously the market reaction is going to be fairly negative. I think one overall theme just in recent weeks is that investors globally have been de-risking portfolios. You see that very clearly in the foreign exchange markets. You see it in the high-yield bond markets, which have had a major setback. A lot of that obviously has been driven by the collapse in commodity prices, but also we see it in fund flows, and investors have been withdrawing cash from emerging markets. So investors are very underweight. They are underinvested in emerging markets. Yep. So if we get some re-risking of portfolios, I think part of that money will go into cheaper emerging markets.
Appreciate your views, Robert. Thank you so much for joining in and giving us that perspective. Ajay, let me get some final thoughts from you as well. I mean, that was a good view that we got from Robert Parker there. It's good for India if it turns out to be that way. But do you think that's how it's going to be, irrespective of what we get tonight? Fund flows will return? Is that, something that you would be willing to bet on?
No, I don't think so. I think the fund flow coming back to India has a lot more to do with what's also happening domestically to the market. That's one. Number two is this, the political fallout of what's happened. Number two. And the third is the fact that we're not a cheap market. In spite of the correction to 7,600 and 7,700, we are not a very cheap market compared to some of the other economies. So I think to that extent, even if there's a surprise, you could see some, the good part is the sell-off is over. I think the sell-off part is over, but I doubt whether much we'll see a big amount of inflows coming in at least the first quarter. And even if they come in, I think they'll be circumspect till we see the results of by the January 15th or January 30th of most Sensex companies. So at best case scenario is the flow has already stopped, may not continue anymore, outflows may not continue, but a large dollop of inflows, I would very much doubt it.
Okay. Well, we have got used to 1 year where we have had practically outflows for a better part of the year. Ajay Srivastava, thank you very much for joining us. One more word from Brijen Puri of JP Morgan, who joins us now. Brijen, can there be something that will roil the currency markets tomorrow?
Hi, Lata. Well, I think, like was mentioned, if we do see hawkish guidance from the Fed, that is something which the currency markets won't take very well, because the markets at the moment are kind of primed for a 25 basis points hike, along with guidance for a gradual move up, maybe ending at somewhere around a 1% mark by end of 2016.
Okay, so there is a chance that tomorrow you can expect some kind of volatility in currency markets, including the rupee?
Yes, if the Fed does go the hawkish side, then that is possible. However, given the experience of September and given the pains that the Fed seems to have gone through in priming the market for the kind of consensus view that we have now, I'd be very surprised if it is anything but a gradual guidance. Whether it's 25 or, as some of the analysts are saying, maybe a 12.5 more gradual on the path towards close to a 1% by next year end. Either of those scenarios should be fine. The fear is higher than that. Probability, in our opinion, is that probability of that is low.
Okay. All right, Brijen, thanks so much for that quick view. Richard Clarida of PIMCO also joins into the conversation. Richard, thanks so much for being with us. How much do you think we'll get, and what impact do you think that's going to have on risk assets like equities?
Well, I think that the Fed's going to hike 25 basis points today. I think that's a very high likelihood, probably north of 90%. The real issue in terms of how risk assets react is going to come down to how the Fed explains and communicates that decision. And they'll have a chance to do that twice. One, in the Fed statement that's released. And then following that statement, Chair Yellen will give an on-the-record press conference. And that's actually quite important because, as she reminds us, the hike is not important. What's important to markets is the projected liftoff path. And I think she'll go out of her way to emphasize, as she has in recent comments, it's going to be a very, very gradual liftoff. If she succeeds, the fallout in risk assets could be modest. If she doesn't succeed, then we could have a sharper reaction to markets. So it's really up to Yellen's communication.
Richard, what we've been hearing from everyone is that it will be a dovish hike. Now, if the markets have already priced in a dovish hike, then even if it were that way, do you think there's space for the market to rise? Or do you think the market has already done all the rising?
Yeah. No, I think that's an excellent question. Objectively, I'm confident it will be a dovish hike. But the real issue is, will it be more dovish than is already priced in? A great example of that phenomenon occurred recently with Mario Draghi at the ECB. He announced what, by any analysis, would be a very, very dovish decision of the ECB to extend their QE program. And yet, because the markets have been expecting more, it was viewed as, relative to expectations, hawkish. So I think objectively it will be dovish, but the question is, will it be as dovish as the markets have priced in? And it may not be.
Okay, you're absolutely the last guest we are speaking this evening before we get the Fed statement. So tell us, after the press conference, will the Dow be higher or lower? Will emerging markets be higher or lower tomorrow morning? What's your gut telling you?
Well, now you're really putting me on the spot. My sense is the dollar will be a touch higher, stronger, and EM markets will be a touch lower.
Okay, we'll take that and we'll check back with you if possible. Thank you very much, Richard Clarida, for joining us in this special conversation. So be prepared for a little bit of a heart attack, not a great deal.